Hello everybody, welcome back to the channel. I have an amazing video for you guys today. We are going to be talking about the housing market. Now here is an article from Yahoo Finance you guys are gonna absolutely love. I will have a link to this article down in the description below. Now check this out. We are heading into a housing recession. Here's what the NAHB CEO sees in real estate right now and why it spells trouble for the economy. It's a great article, guys. I definitely, we're gonna read a little bit and I'm gonna give you my personal analysis, but here's a quote. We are heading into a recession. Now, do you guys agree that we're heading into a recession? A lot of people, there's a lot of mixed feelings when it comes to this because some people say that because we have really strong employment right now that it's basically we don't have a recession. The issue that I'm having is that we had the Great Resignation, right? Where there was basically no employees out there. And now to bring people back to work, companies had to raise their prices. And that is basically going to keep inflation up. The problem is now the companies now have to sell the product for a little bit more expensive to compensate for the new prices and wages. And also we have inflation going across the board. So now there's higher prices for the manufacturing, for the raw materials, for shipping, all that stuff is playing in, right? So we kind of have a semi-crazy problem right now. Why is this all happening? I do believe it's because the government essentially printed, $10 trillion during coronavirus. A lot of people got a lot of money. There was a lot of stimulation in the economy. And then we also had record low interest rates where people were able to take out money for seconds from their house. They took that money and did other great stuff with it and bought things. And basically we had too much money in the market. And then basically what happens is we have inflation, right? Where everything now becomes so expensive because, we're saturated with cash. The only way to bring down inflation is really to suck the cash out of the economy. And as a result, what can happen is the economy does start to begin to slow down. What we start seeing is it becomes harder for small businesses to make profits, right? Because they're not buying in bulk like people like Walmart are, right? The small retailers, they really depend on their core customers to come in and buy their products. If those people are kind of strapped for cash, it really hurts their bottom line. And when they're paying more for employees, they're paying more for everything, and paying more for rent. We know the rent is through the roof right now. They can't hang, right? They can't hang, and sometimes they have to go under. When we start seeing more of that, we're gonna jump into the recession because then we're gonna see a lot of layoffs. Now, how is that gonna happen? I mean, let's read a little bit. Here, so as we already know, okay, housing has led to every recession since the Second World War. That's statistics. Now, so builders are holding off. So builders definitely have scaled back. Why? Because the cost of building a house is costing too much, and the land is costing too much. So they're kind of in a pickle, right? They want to be able to buy the land for cheap, and then they want to be able to build for cheap so they make more profits, right? The problem is both building and buying the land is too expensive right now. So they don't want to basically go out and build a bunch of houses and then the market drops because of a recession, and then now they're stuck with this huge inventory and they're literally taking they're taking a loss on it, and they're not going to do that. So they are kind of slowing down and they are not building as much, which is double-edged sword. Why? Because now it's keeping supply down, right? And what we need is supply to be up in order for prices to come down, and we're not seeing that. So I think it definitely is a dangerous situation. And I think that in the last year, I know there was a lot of ARM loans were given out. And now with the interest rates going up, you could also see a downturn. But basically, in general, the way I see it is the housing market. If you look at across the United States, if you look at the prices, how much they've gone up from 2019 down here all the way to 2022 up here, what you're seeing is an incredibly inflated price. I mean, we had houses back in like 278 around this time, 276, now being 385. And to a lot of people, it's like, hey, great, housing is up. But the problem is people can't sell their house and move into something better, right? Because what they want to move into is too expensive. So people are holding on. They're holding on to their properties. Plus, there's a lot of talk about companies like BlackRock and corporations coming in and buying massive amounts of properties, right? And just making people, turning our community into a bunch of renters. So people are like holding on to their property. They don't want to fall behind. They don't want to lose everything. So there's a lot of fear right now in the market, but people are happy that things are high. I just don't think they're going to be high for that long. I definitely think, in my opinion, we're going to see a correction. But in order to definitely see that big correction, we're going to have to see layoffs. We're going to have to see the economy definitely take a downturn. And that is very, very sad. But basically what that's going to do is generate a lot of inventory. And hopefully, there's, you know, when the prices do come crashing down, it kind of stabilizes for a while and then gets the economy back moving, and then, you know, kind of goes back into the regular cycle. Now that is obviously if nothing catastrophic happens, right? Like hopefully we don't have another coronavirus or something like that. But yeah, I mean, we want to get back to normal. And I think that will be the process of getting back to normal. If you look at the recession, Redfin housing downturn risk score, you know, if we start seeing some of these red dots, man, these red dots is where the houses just ballooned in price. And now what we're seeing is that they are the most susceptible to a downturn. So if you're living in any of these red dots, most likely you're going to see prices drop over the next, you know, year or two. And hopefully that will give you an opportunity to jump into the market. Hopefully the rates are reasonable at the time. Remember, it's better to buy a house, a cheaper house with higher rates than a more expensive house with lower rates. Why? Because you could always refinance later. But, you know, buying that house at a higher price is going to really lock you in up there. And it kind of sucks. You know, you want to know that you always have a little bit of equity. That's why it's really important to buy in the bottom, right? So if you're living in any of these blue areas, you're pretty much looking pretty good, right? You know, I mean, obviously Oakland and San Francisco, San Jose, and San Francisco, okay, they're blue, but that's because cities like New York, San Francisco, Seattle, they're always going to be hot. They're always, because there's very limited supply in those areas because the cities are small. And the issue is that everyone from around the world wants to live, you know, if you're like a millionaire living in Europe or Asia or in China or whatever, you want an apartment in New York, you want an apartment in San Francisco and Seattle. I mean, it's what rich people do, right? But some of these other areas like Idaho, Boise City, we're gonna see one of the biggest downturns. This is the one that's probably gonna crash the hardest, just because it went up so much so quickly. And then also Riverside is up there too. Riverside is looking worse and worse every day. So if you're looking to sell a house in Riverside, you know, right now your window is closing really quickly, as you could still get decent amount of money for your house. But if you're buying, my opinion, my suggestion to you would be just to hold off, because I think you're going to be able to get a spectacular deal, you know, in the next year or two. We're all going to have to see how this all pans out, man, because this is a really weird economy right now. With inflation doing what it's doing and the Fed's trying to fix it, we're just going to have to monitor it day by day. This is kind of a big deal, but you know, that's what I'm here for you. That's why I'm here doing these videos for you, to keep you educated and also entertained, because I do want to make these videos entertaining. Now, to finish up, guys, I want to just say thank you guys so much for all the support I've been getting. I've been getting so many views on my videos, and I think it's really, really great. I really appreciate every single one of you for comments and likes and just overall just supporting my channel. Thank you guys so much. Now, if you guys are new to the channel and you're interested and you like my videos, don't forget to hit that subscribe button and go ahead and like and leave a comment. Thank you guys so much for watching. I love you guys, and I'll see you on the next video.